Ready. Okay, 1 second. Alright. Hey, what's up, Kai? Thank you for joining. Good morning. Hopefully you had a good weekend so far. Okay, give me 1 second. Alright, so today I feel like I wanted to kind of revisit a few things here because I feel like the morale of what is happening, what is it? The tariffs and all of that, it's just scaring people out of like their own position here. And what I'm worrying about is that people are not going to understand when the market is going down, and even the price of XRP. I mean, price of GME as well. Any type of stock, anyway. And again, this is a thought as a risky stock, to be in. So, of course, with that type of fear in the market, you're gonna see some volatility there. But to me, again, it's just a mindset thing, for anyone to be in it. And of course, GME is not for everyone, for sure. And if you are investing in this type of company, obviously, I hope anyway, that people know the risk that they're taking. In my opinion, this is the least risky stock, in my opinion, or company to be in because of the balance sheet itself. But the stock itself, it's just different. Okay. So, hold on, let me see if I could bring my screen back here. But we're gonna talk about a few things here. I don't know how long I'm gonna be here. So I have a couple things that I wanted to show, and just to reiterate a few things. And I'm gonna, bring our cult leader over here on screen, so to help me out, because I feel like, my words alone doesn't really registered. doesn't hold any weight at the moment. So I need some help. But anyway, now let's get to it. I know the chart I'd show quite a bit of time already, so let's kind of skip that for today. And I'm sure you have it memorized already if you've been in this company for a while. But for those who may or may not care about how the price action is doing, I fear that people might miss the whole point of why people invest in this company. The real reason why people invest in this company. Now, I know the reason that I got into it because of the fundamental and the turnarounds story. I hold that weight a lot more than the price action in and of itself. Like I said, it's fun to see the price going up for sure, but when it's down, right, it seems like a gut punch for sure for some people. And I don't take that lightly because, again, if you're not in this type of company and you're not used to the volatility, it's going to feel so bad, right, when the price coming down. And what I fear is that people are not going to be able to hold on to the volatility if it comes down even lower. And so, and again, they're going to force themselves to sell, right, because of the pain, and then missing out on what is to come. I know everybody is excited about the earnings report that is about to be placed in about a couple of days. But I want to caution people, right? Because again, yes, be excited, be on the lookout for the reversal and all that stuff. But understand that, if you buy calls, it's going to be a lot riskier than buying shares because at least shares, it's not going to expire. Okay. Hey, Sharon, what's up? Thank you so much for good day. Good morning. But anyway, so shares not expired for sure. And so, but that doesn't mean just because it's low price now, what I believe it's low, it doesn't mean that it's not going to come anymore down. Okay. So they could still try to scare you, shake you out, and test your, certainty. They're going to try their best, for sure. So be on lookout for this low and also this low as well. What scare people more would be over here, right? Just to test your patience, right? And then immediately, of course, this happen oftentimes. Can you imagine if it hits this price point again? How is it going to make people feel after the earnings posting positive? Right? They've done this many times, you guys. So I want to caution you, just because the earnings may be good, right? Amazing. That's all we're expecting. But they could still mislead people because that's all they could do at this moment in time, right? They can't say that the company is going to go bankrupt anymore. They can't say that Brian Cohen is not doing anything, right? They can't say that GB is not able to grow or GME is not profitable, right? They can't say that GME doesn't have any path to profitability or even growth, right? So all they could do is to cast the price down, okay, and scare more people even after earnings. Don't believe me? Look. They did it over here. Okay? So not to say it won't come, it will come down like that, or how it's, they could fake you out too, right? So be on the lookout for that type of fake out, and just rest assured, you guys, I'm telling you, if you're in this play and you still don't believe in this, I understand the price point is what people are looking at, and that's why they do this thing to you psychologically. But the company is not the stock. Understand that facts, and you will be so much more, sane when that happens. And not only that you're sane about it, is that you're gonna add more over here too, if you have money too, right? But don't over leverage yourself. Of course, the scary part is that people borrow money to invest, right? And then when they're forced themselves in that corner, no wonder you feel so trapped, right? Because like, oh, if it goes any further, I'm not going to be able to hold. That's why you don't. That's why you don't borrow. Or if you borrow, make sure that you are able to survive the month to month, right? At least the cash flow of it. All right. And as long as you can maintain the payment that you're borrowing off of to, invest in this real quick, just because you think it's going to go up, right? Just understand that, and the pain may come even lower. And so I don't mean to laugh. It's just that you have to calm yourself. You have to understand what you're risking right now if you borrow money. And better yet, or worse yet, you borrow money to buy call option, hoping to make $1 billion in 2 days, right? So I hope it happens for you, right? If it doesn't, this is the thing that you are, the decision that you have to make. Now, thank goodness, no one close in my life have bought any calls or anything like that. It's just straight up shares, which is a lot safer, in my opinion, in this type of investment. But again, this type of volatility is a blessing in disguise. And if you are able to see it from my point of view, you would understand why I'm so convicted in this stock, that I've been holding and I've been waiting for the opportunity, right? And of course, like you could say that, oh, I missed these two opportunities to sell at a high. No, this is nothing to me, right? Because I didn't need the money at that time. And if I were to sell, my lifestyle doesn't change, okay? And so I'm willing to wait and add more as time goes on. And, yes, I want it to happen, in these earnings, for sure, okay? But the psychological, torment, I understand that it could hit people harder than me, because I've been here for a long time, right? But for somebody who just started the position 6-7 months ago, just rest assured. That's why, again, do the research on the balance sheet point of view. Don't worry about the price action, okay? At this moment in time, as long as you're able to, grab it at this level, like even if you buy it over here, right, up here, understand how much equity you got from the company, right? Worst case scenario, you have to wait how long for the company to bring you, at a higher, equity per share, okay? And so even at this price point, it's still a steal for me, in my opinion, right? Because it's like, only 3 times book, really? I mean, with all the inflation that is happening in the, markets right now, all the trillions and trillions of dollars that have been, quote unquote, lost, it was not lost anywhere. Somebody got that money, right? And that money is going to come back into the circulation. And there's evidence of it already. So I'll show you later. But welcome, everybody. Didi never sleep. Let's hear it. Not much Didi here. It's just a pep talk at the moment, because I feel like, the due diligence has already been done already. And right now it's ongoing of the, I'm trying to get people to understand that the stock price is not the company in and of itself. So, but yeah, appreciate that. started a year and 4 months ago. Oh, cool. Yeah, so if you just started a year and 4 months ago, congratulations. It seems like you've got the right price. But, for people who got it up here, right? Like I said, 3 times book, that's like a steal in my opinion. And now you have the opportunity to buy at, let me see, 2 times book, right? So if they are dropping it down to this level right here, which is possible, okay, even after earnings, after goods earning, because that's their last, hurrah, right? That they're able to convince people that this company is shit, okay? Because even with the good earnings, the price still coming down. And again, what better way to convince people, right? And they've done it here. They've done it here. And what happened after that? A couple of months later? Because again, they want you to sell. It's up to you to understand that. I guess fortune favors the brave type thing in this situation, right? Fortune favor the people who are convicted, who understand the balance sheet more than anyone. Okay, so I hope whoever listened to this and are in seeing their red portfolio and still questioning whether this company is the right company to be in. In my opinion, it is. In my opinion, this is the least risky company on the market right now. Balance sheets, why? Okay. When people are telling you cash is nothing, cash doesn't mean anything, they don't understand the current market cycle. Okay. If we are expecting a downturn, of course cash is king. Why do you think Warren Buffett has so much cash? Okay. Yes, eventually that cash gonna get deployed. Okay. Hopefully, he's buying into gold, or some sort of store of value type of investment, or some other company that will, give some sort of return. So again, all of that is just speculation, you guys. Look, so unless it's written on the paper, on the earnings report, annual report, which is in 3 months from now. So again, that's to be excited about too. So, but I just want to prepare people, prepare for the worst, hope for the best type thing, right? And that the worst case scenario, if you have to go through it, you will survive through it. Okay, so that's the whole point that I'm trying to get people to at least get a pick me up a little bit here. I bought low and high and the high. Okay, so okay, good. I'm not selling until yes. Okay, cool. It's 40% tax and wow, and the Denmark. Cool. That's okay. I mean, is that for long-term capital gain as well, or just the short-term capital gain? Yeah, I mean, I hope you have enough shares for that status. And again, I don't know how high it's gonna go because I don't know how many short positions are still there, whether they already close it out or not. It's again at this point I'm just speculating because I don't have the number in front of me. So the official short interest is only 6 or 7% right now, which has been coming down. But again, that they could hide that in so many different ways that it's hard to take it at its face value. But even without the short squeeze, this company is still will grow, right? I know it's not as fast as people would love it to grow, like the tech stock out there. But again, if you have the tech stock that grows so much faster, then you're buying into a overinflated price point anyway. So by the time you hear it in the news, it's too late for you already. So that's why, again, when it's boring, when it's down, when it's, casting doubt, this is when you're supposed to be, more bullish than anything, right? But people, again, the momentum traders and all these people are gonna come back to it eventually, just like how it was over here, right? The most convicted got rewarded so much more, right? So this is when Kitty was about to be a billionaire, okay? Now, of course, buying call options and all that stuff, but he risked a whole bunch and he got rewarded a whole bunch too. So this is just an investment style that he's going to. Hey Morantz, what's up? Thank you so much for joining. Short interest in increase in the last report. Oh, cool. I haven't even checked on that one. I checked on Fintel a couple weeks ago, and it was like 6%. Okay, I mean, where is it increase into? Thank you. Just putting the donation to work. Oh, cool. Yeah, I saw your giveaways video. Your time, your energy, your camera lady. Oh, okay. It's all appreciated. Of course. Give some loves to Morantz. The Grand Poobah, I would like to say, second cult leader. Okay. Okay. So, okay, I lost my train of thoughts. But again, just be aware of what is going on. The price is just the price. Don't worry about it. The company is doing much better than it is today. So that's all I could say for you. If you're just worried, if you're just like second guessing yourself whether this company is the best company or not, that's up to you to decide. I know, people who have the same information as I am will disagree with me vehemently that this company is not going anywhere, right? But I really think that these people don't have the vision that I do, about the company's growth factor. Okay. And when I try to explain the growth in the future, they think it's a pipe dream. It's not a pipe dream to me. Okay. Because I know we have the ability to grow much faster than any other retail company out there in the world. Yes, including Amazon. I'm telling you. But speaking of Amazon, right? So let me just show you this interview right here because Jeff Bezos, it's, whether you like him or not, he's the most successful e-commerce type of tycoon here that figure out, that long game is much better than the short-term gain here because the long, incremental change, little tiny change will add up to a massive amount of growth that you can't even catch up to it when people are starting to realize how much, those compound growth from decades of slow and growth and study that build about the foundation to build the Amazon the way that it is today. Okay. Now, the only company that I could think of, I'm sure you could name other company, but in my purview that could grow into the Amazon status is GME. I know you're not gonna believe it today. 20 years from now, you're gonna believe it. So let's listen to this segment here. This one is explaining to you about how the stock is not the company. And I want you to learn from it because I'm sure you probably see this, talked about it, me talking about it before.
Less than a year. My annual shareholder that year starts with a one-word sentence, and that one-word sentence is the word ouch.
So most of those internet companies of the dot-com era are out of business.
Yeah.
You survived. What was it that made you to survive and virtually the rest of them are gone?
That whole period is very interesting because the stock is not the company and the company is not the stock. And so as I watched the stock fall from 113 to 6, I was also watching all of our internal business metrics, number of customers, profit per unit, everything you can imagine, defects, etc. Every single thing about the business was getting better and fast. And so as the stock price was going the wrong way, everything inside the company was going the right way. And we didn't need to go back to the capital markets. We didn't need more money. The only reason, a financial bust like the internet bubble bursting makes it really hard to raise money. But, we already had the money we needed. So we just needed to continue to progress.
Well, Wall Street kept saying, well, Amazon's not making any money. They're just getting customers. Where's the profits? Where are the profits? And Wall Street kept beating you up on that. And your response was, I don't really care what you think?
Amazon was, people always accused us of selling dollar bills for 90 cents and said, look, anybody can do that and grow revenues. That's not what we were doing. We always had positive gross margins. It's a fixed cost business. And so what I could see is that from the internal metrics is that at a certain volume level, that we would cover our fixed costs and the company would be profitable.
There you go. I mean, I hope you draw that segment, and I could see Jimmy in it. I don't understand why people just so short-minded and perhaps again that campaign of media just keep beating you with bullshit about how this company is not something, right? How this company is so shit. And again, if you say it many times to many people, it sticks. And it worked for them, right? And media after media come at you. Even just investing in a company and wait for it is a labor of love type thing, right? It's like it's almost offensive to them that how dare you hold GME this long? I'm like, why? Why not? I mean, come on. I've been here, less than 4 years? I mean, how long do you hold a company? It's like, for people to have respect, I only have to hold, 2 months? A year? It's like, what? And so again, we have a culture of instant gratification. And I'm laughing because I'm like, okay, then if you want to just, it's like, again, the opportunity cost thing, right? Moran's talk about that too. How people is like, oh, if I had done this, I had done that, if I had jumped on this one, I would have been a trillionaire by now. Of course. But in hindsight, obviously you said that because you have the magic of hindsight, right? Looking back at it. Of course, looking back at it, had I jumped on SoFi, had I jumped on, Palantir, had I jumped on Amazon when it was $6 a share, right? Way back before I even know how to invest in the company. You see what I mean? So the what if is what people are trying to get you to say that this company doesn't do shit. And I'm telling you again, and then the comments that go, you're married into this stock too. I'm like, okay, that phrase is like, what's wrong with marrying into a stock when the stock is doing well? You see what I mean? And when I say the stock is doing well, they're like, look, the price is down. I'm like, I'm not talking about the price. I'm talking about the company. I'm like, it's so comical sometimes. Like my whole existence is just like defending this company. It seems like it's like, no, I'm not trying to defend it. I'm trying to let people see what I'm investing in and that I'm not crazy. I know that I'm not crazy. I know that I'm right about this stock for sure. No question that, I buy whenever. Like when I see this type of price, of course I'm going to come back. It's like, and try to get people to understand this company the way that I do. But that's impossible, honestly, because, I do a lot of research. I consume a lot of GME content. Maybe that's my problem, that I do that a lot. But again, this is the investment that I think is going to give me something, in the future. And so, of course, naturally, I want to know everything about this company, right? I want to know that the leadership, how they are investing in or looking into something, really, give the fruitful, will give this company, an edge over any other ones. Okay. So again, whatever type of investment thesis that you have, I'm sure it's valid for you. Okay. And it really doesn't matter what company you're getting into. I really think that it all comes down to your strategy and your personality. So understand your personality. If you can't handle these type of volatility, then don't get into this company. Honestly, you might be better off just selling, whenever you have the ability to, right? And if you don't want to sell at a loss, just have enough patience for the stock price to catch up to its fundamental. Okay, so that's the only thing that I could tell you. If you're watching, you know who you are. If you're watching this, it's again, I had a long conversation last night, so that's why it's just top of mind. And it's so amazing to me that people don't see this. But let me bring another cult leader over here. Of course, this is the original cult leader that we have in this community, Roy and Kitty. And this is when the stock price is already kind of up 21% already, okay? And so he's going to explain later. Brian Cohen already came in. But again, it's just showcase how news travel in terms of, the opposite, psychology, like how people's psychology, when the price is up, they say what, but when the price is down, they say what. And again, this is related to the articles and the medias and all that stuff. And really, it really give you insight into what is to come, right? What are the negative things that are going to come out after earnings, right? Or before earnings, leading up to earnings, right? So let's kind of listen to everybody. Sorry, doesn't matter for how long you hold it. You can have about $24,000 in an account where you are only taxed. Oh, okay. 15%, the rest of the capital gain. 40%. Wow. So even long-term capital gain doesn't apply. Okay. I see. Thank you for sharing that. Hey, what's up? Chinese Communist Party. Thank you so much for joining in. Okay. These people are thinking different wavelength. Some are surface level. Some are indoctrinated. Of course. And I mean, sometimes it's subconscious for sure. Some people just naturally trust in the institution that they consume the news from, and I don't blame them, honestly, because again, maybe it's algorithm, right? That's the only thing that they are exposed to. So of course, that's how they would, naturally think about the company, how to evaluate it, and all that stuff. But I'm telling you, the metric that they're using, of course, that's how Wall Street is being kind of like sorry, Wall Street teach people how to evaluate company, which is like that is good, it promote growth and all that stuff, right? But what they don't really tell you is that is good for the senior notes holder. It's not good for the common shareholder, okay? And so, but most people think that they don't even know that, when you buy into the company, you're not actually buying at the level in which the senior note holder buy into the company. So they already experience the kind of inequality within. It depends on which one you hold, right? They have a preferred share, they have a senior notes, they have a convertible notes or whatever. And most people just didn't realize that is something that they need to look into for the company too, right? And so the misunderstanding comes from that. And so unless you know there's a level of shares that gives you an edge, then you don't really know how important GME is. I'm telling you, GME hits on that point too, where Ryan Cohen shares is the same as you and I shares. There's no senior notes. There's no convertible notes that we could think of. Of course, that doesn't mean he's not going to make that happen later. But currently, if you buy one share of GameStop, it's the same exact level as the share that Ryan Cohen owns right now, and every other leadership too. So it's all common shareholder. So this is why it's so important for people to look into that and then understand that, Ryan Cohen is not even taking a salary. Okay. This is his success. This is, again, the way to go. It creates the opportunity for people to be like, okay, do I want this type of company, this type of leadership? That, whoever buy into a share of a company is equal footing to the executive. Of course, like he has more amount of shares. You can't, compete with that, because unless you have $1 billion to put into the company, you're not gonna, have equal amount of shares. But the shares that you buy, one share is the same. One vote, you get one vote, the same vote as Ryan Cohen here. Now, if you want the same vote as Ryan Cohen, obviously you have to exceed his portion, right? So that's still there. And so, but yeah, so that's just one other things that people don't realize. Okay, 51 share, 51. Okay, let me play this real quick and I'll come back.
Tyler Kelly, cheers. J.O. Oh man, we got lots of new folks. All right, let me scroll up, say what up. Julio Medina, welcome. Who's this? Ticker Sticker, cheers. That's a cool name. Nolan. Hey, Nolan, all right, Nolan Rayner, cheers. Thank you. Welcome. Happy New Year, man. Happy New Year. The Nordic. Welcome to Nordic, cheers. Oh, people, exactly, right? Well, that's the thing. Not that it matters too much, right? You can get into the weeds with charts, as most folks know, but does it count as a shoulder if it hasn't leveled off? You know what I mean? But who cares? We do all else equal. You want it to just keep going higher. But indeed, to the point that he's talking about, I'm pretty sure he's talking about this. That's what this looks like, right? Let me actually, I don't even remember when I made this. Let me just do, I don't know, a little bit longer. Oh, is that 3 years? Oh, I can back it up. Oh, wait, if I adjust for dividends, though? Oh, it's above 3 years. I can back it up. It was originally 2.5 years. I was probably just doing it for Crayola reasons. But you back it up to 3 years. Look at that, and we're breaking out. How come it seems to me not enough people talk about this? I think I've definitely seen chatter pick up, right? We got a fundamental thesis, and that's where you can derive, you can have a lot of confidence in a position, and we can get multi-baggers for stocks, but like technical analysts can get involved when they see something that's kind of exciting, and I think this chart looks very exciting. And then if you go even shorter term, right? This looks terrific. Right? You see some folks are talking about that, right? But then the momentum folks kind of see what's happening, and then they spot the short interest, and you think, this is fuel for this stuff, because now you have different types of market participants all getting bullish on a stock for maybe different reasons, maybe some overlap, right? But that's why it's been big over the past like 4 months, especially in like September, October, where this was starting to kick off. Because it's like, if this happens, there's going to be a lot of people excited about it. But with all that said, it seems like it still hasn't gone crazy to me. It's been a very measured move up, and that's what I mean. I felt like that's, if you have a long enough time horizon, that's good. You kind of like to see that. It kind of makes it a bit easier to kind of digest the information, to perform your analysis, assess what's going on, manage the position, all that stuff, because it gives you time. But all else equal, it's nice when it goes up quickly. Again, only a little bit crazy. Only a little bit crazy. Okay. Okay, just Patrick Lee. What up, Patrick Lee? Cheers, Steve says the Uber kicks. Yup. Cheers to Uber. Okay, I'm just down at the bottom. Zenian saying, without Cohen, what a dish by now. Yeah. So that's what I mean. Like Cohen, and he made this point in his letter. Well, I don't know if did he make it? I forget. He's like, a big part of the move is him. And it's true, right? It's not exclusively him, right? These value stocks, they're undervalued. People come around to it. Like I said, that first part of the thesis was more just the general undervaluation. However, Ryan Cohen has accelerated this reversion to, I mean, I don't want to say fair value because that's messy. At least fair value of the legacy business, right? He has accelerated that reversion. There's no doubt about it. And I think, and you have to wonder where would it be without him, right? I mean, it could be quite a bit lower because without the storytelling from so far, without the storytelling from management so far, and without the robust quarterly performance so far, you could understand institutions dragging their feet on this, even though it doesn't break the thesis, but it drags it on, and a Ryan Cohen type accelerates it. And I had felt, I don't want to, I keep repeating myself, but I had thought that someone else might see what we saw, right? Someone else, I thought it was going to be PE firms might get involved with this at the time. But as soon as Ryan Cohen involved, then that one went down, but Ryan Cohen went up. I felt as though maybe, and I think many of us did, it seemed like someone would see what we saw. It would have been weirder to me if no one got involved. You know what I mean? Like, that's why I was talking about. I'm like, oh, well, someone's going to see this, and someone's going to try to take advantage of the situation because it doesn't deserve to be trading where it is, and someone will step in. And then it was July and August. I'm like, where is everybody? Right? And then he was like, wait, are we wrong? Wait, are we wrong about this? It's like, but then Ryan Cohen did. And anyway, regardless, so it's even better, I think, that it's Ryan Cohen as opposed to someone else or some other firm or a PE firm, because Ryan Cohen's the type. He's a storytelling type. He has success with a Chewy type business model. Like I said, you saw my pinned tweet. I mean, if you've seen my Twitter, like, we did that analysis that Friday night, right? And if you just replace the pet stuff with gaming, he's the right guy for the job, in that you not only revert to the fair value of the legacy business, but it gives you confidence that they can achieve that upside down the line, the second level of the thesis. Whereas if it's like a PE firm or someone who you can't really understand what they're going to do with it or whatever. Like with the Ryan Cohen, you kind of like, where he's going with it, and that gives you confidence in that. Whereas if it was someone else, you might be like, I don't know. And that's why I think it's great news that it was Ryan Cohen. Anyway, I don't know what I'm talking about. Okay. Transformation. Foams, cheers. Big love to Dr. Barry too. Oh yeah, Luca. Cheers, Luca. Well, I agree. So be loved. I mean, I don't know. I'm going backwards there. I don't know. Cheers to Michael Berry. Michael Berry is here too, right? Of course. Cheers, Michael Berry, who big part of my thesis too, right? His analysis was very much aligned with my own. But who knows if he's still holding, right? We know he's not above 5%, and we would have known by now. And with other opportunities out there, who knows what he's doing? But indeed, he was somewhat on this GameStop train too. And then we talked about the likelihood of him sticking around for the second level of the thesis. And it doesn't seem like his style because he's a bit of a deep value investor, right? But and I don't know if he's willing to I don't know. But I wonder if he's intrigued by the short interest, though. I wonder if he's like, what the hell's going on here? But we saw him trimming his position, right? And but I'd be curious. We'll see. We'll get the update. When do we get the update? Oh, about a month from now. I'd be curious to see that. Okay. Okay. What's we got here? Oh, Struts. Cheers, Struts. Welcome back, Struts. Cheers, cheers, cheers. Happy New Year, man. Happy New Year. Okay. Okay, so saying the current board won't be able to spend or allocate money, dollars from the console sales now firmly devoted towards Cohen's relaunch. That's fantastic news. I agree with you. I agree. Now, that's what I mean. Like, now you are betting against Ryan Cohen. That's why it's kind of, and maybe some folks are willing to, right? It's dangerous. That you can do it. You can do it. But it's dangerous. And so that's to Strutz's point. And Strutz is talking about the capital allocation decisions, right? But they're not even doing a conference. They don't even do the conference without him. That's what I not without him per se, but without his input. And that's the right move. Management doing the right thing. I mean, they're part of the board now too, right? So of course he has a say. Of course. But now, so if you do believe in Ryan Cohen, to Strutz's point, that they're not going to. For some folks, they might say, "Oh, this management team, they're gonna blow all the capital. They're gonna waste it." Even though this management team has not even come close to doing anything like that. On the contrary, they have spent the bare minimum. Very early on, announced there would be no acquisitions when they were first getting started. Like, they said all the right things. Like, they don't seem like the profligate spenders or anything like that. But even still, it's still an okay point to bring up. I'm not saying it shouldn't be brought up. But if there were that risk, gone. Because if you feel as though Ryan Cohen can effectively spend that money on the right things, boom, then you're all set. Because now that's why amicable resolutions, everyone was motivated to do that. And remember, Sherman owns a shit ton. Not a shit ton, that's too aggressive. But he owns over 2 million shares. So and if the other management team, if they had owned more, they'd be big beneficiaries of it too, right? But so if you're on the Cohen train, this is great news across the board. I agree with you, Struts. I agree.
It's really hard for me to interrupt our cult leader, so that's why it's been so. So the point there is there to kind of, again, the whole central thesis about GameStop, even until this day, is Ryan Cohen, right? Whether you want to bet against him or not, that's up to you. You could still do it, right? If you think that this is overvalued, $23 a share right now, it's overvalued, go ahead, short it, or just don't care about it, right? And still continue to believe that this company is not going to do anything, that this leadership hasn't done anything, right? That, he's just sitting there twiddling his thumbs and posting picture everywhere just to troll the internet at some point. But I'm trying to find the one that it's probably coming up right now, where he was talking about the news, how market reacts to this type of information, even though it's positive, whether it's going to be how they react to it. So it hasn't come up yet. So let's continue there.
Aaron Sedoi. Well, welcome, Aaron. Happy New Year. Happy New Year. Cheers, mate. All right. Lars, you were 69%. Cheers, Lar. Welcome. Well, I'm losing track of who I'm saying welcome to, too. I mean, what's everyone's price target? I mean, it's pretty obvious what the price target is right now, right? I mean, it's almost certainly going to $420.69, right? Kidding. Am I? On that note, let me just grab.
That's funny because it did hit that, right? For $4.20.69. And that's one of the things too. See, this is why, the spike that comes up and down, that you see after hours. That's why we think, right, as a cultish behavior over here. So excuse me, I'm gonna be a bit cultish. excuse my cultish behavior. But the 420 and the 69, right? You see that certain shares just jump up there real quick, and go check in the X account. I'm sure you see it yourself too. The 69 and at 69. That's why we think that it's from him, Right? It's a trolling things that perhaps he just signaling. Of course, I don't know. I'm just speculating, but based on that comment alone, you kind of see how his personality is. That he sees something coming here and try to prepare retail to at least be prepared, right? Yeah, there's a reversal coming, perhaps that you need to be excited about, but don't hang on your life savings on this. And worse yet, betting on your house and all that stuff. It's very risky. Okay, but the point is that just be responsible. Don't take this with a grain of salt, just an entertainment purposes. It's just my speculation here on just that 423. It's not a meme. Yeah, of course. But yeah, we did hit that right back in 21 when we sneeze, so to speak.
Oh shit!
I mean, had they not removed the buy button, right, we would have been much more higher. When I said we, I wasn't even then. I was an investor back then.
Oh, y'all agree?
Oh no!
It's almost certainly going to $420.69, right? Kidding! Am I? On that note, let me just grab. Oh shit! Oh, y'all agree? We all on the same page? Yo, what's that market cap though? For real? Hold on, wait a second. What's that market cap? How many shares? 69? Ooh, that's a big market cap. It's not like it's impossible though. What is it? 30 billion? It's not crazy. I mean, it's absurdly high, but it's not impossible. It's not impossible. With some tech multiples you see out there, it would be a dramatically different business, such that the legacy business, it would be unrecognizable probably. But it's possible. That one would take time.
See, it's important, see, because he had the foresight. Even again, it's slow. Yes, when you have a transformation this big, it's really tough to turn around a multi-billion dollars industry here. And people don't realize that because, perhaps, I'm telling you, actually, Wall Street realized that. I know that they know it's going to take some time, but they just, put an obstacle in front of you, in front of retail, saying that it should be transformed already, when they know it's going to take time, okay? And that's why they send a lot of negative articles, negative, PR, from all of those financial media to tell you that this company is shit. This company is not going to do something. Ryan Cohen, remember Brian Zuzi, writing a letter to Ryan Cohen publicly saying that he has to come and explain himself. Like, why? He's busy running a company. Why do you want him to waste an hour of his time going to you to explain what, right? And so, and again, like this type of leadership you don't want to miss out on, because he's there unrelentlessly working his ass off to turn this company around. And as a shareholder, you have to respect that. If you don't, then okay. I mean, simple, right? Vote with your money. Vote with your dollar. Don't buy this company, really, because you're going to pull your hair out. You're not going to understand it. So these things takes time, and time, would go, if you blink and you miss it, it's going to be 10 years from now, right? Time goes by fast, I'm telling you. If you don't just stare at the screen all the time, Jimmy is not going to go anywhere. Okay? Your investment is not going to zero. I assure you that. It's impossible at this moment. It's hard for me to guarantee, but there's no guarantee in life. I'm sure you know that. I hope you do. But it's the least risky thing. Company, right? Talking about company, not price point. Okay, price could do crazy things. Okay, people are crazy sometimes, right? Emotional. So leave your emotion out of it. And if you put $1 into this company, understand why that dollar is there. Okay? And if it comes down to 50 cents, understand why it comes down to 50 cents. Is it because of Ryan Cohen, effing up the cash pile that we have? Or nothing changed about the company, but the price coming down? Right? And if you don't think that is the opportunity, I have no idea what else to tell you. How to invest. Because, price dip is for buying, not crying. Okay? Because again, if you understand the company from the fundamental level, you would be so happy. How many people kicking and screaming, again, any type of investment at all, whether it's Bitcoin, whether it's XRP or whatever you want to invest in. Think of it as a long game, and then you win in the end. Because there's a lot of manipulation going on here, psychologically, otherwise. And so you have to be so convicted and understand the company from within. And then know that, certain things take time, certain improvement. And even if they're improving, people could still be blind to it. And then mislead you by the price action itself, bringing it down. Just to scare more people. Just to give the impression that the earnings was not good enough. When it is the best thing ever. If you just wait a couple more weeks, until they figure out how to pay you. Okay? Because of the market structure that we have, we don't have a fair market. Okay? Because we have payment for order flow here. So, anyway, I hope I explained that well.
And again, you know me. If you're betting on the short squeeze, be careful. That is a dangerous, risky play, right? If you don't know that about my analysis, that's how I feel about that short squeeze stuff. Very risky, very difficult to time. I don't even know if it's possible like this because it's not like the VW stuff where it's very concentrated in a couple of holders, blah blah blah. But aren't you like, what the hell's going on here? How do they get out?
How did they get out? I mean, this is so important, right? If the thesis is true about MOAS or whatever, again, like he said just now, it's risky because we don't know. There's no number associating with it. All of it, just speculation, right? I'm willing to say that, of course, there are other people who dig deeper than I do. But if it's true, there's a slim chance that it might be true. Okay? You're going to see some crazy things.
But especially in light of the Cohen news. This is why, for months have passed where many of us have said this, right? Where Cohen was making a move, right? He's making a move into the stock, buying more shares, sending that letter. And many of us were talking about this in the chat. That's a material. I felt as though that was a material risk. It could evolve. It could transform into a very real risk, even though Ryan Cohen, just those incremental purchases and stuff don't immediately break down that bear thesis, right? I've said that. But imagine if this unfolds, you know what I mean? And because it's kind of happening. The stock is at 20, despite some of the negatives highlighted in that Barron's article, right? I felt as though it was a bit imbalanced, where it didn't talk to some of the upside. I thought it was imbalanced, and but even still, despite those, the stock's at $20, and you have some folks, and it appears as though that the take was, oh, well, you got all this bad stuff happening, and the stock's at $20. That's because it's bullshit. You know what I mean? Like that, you see, not just in Barron's, but you see it all over the place. You think, and they, oh, it's just bullshit. It's just a meme stock. It's just bullshit. And I think, no. Oh, unfortunately, if you're betting that way, it's not that, because it's just because Brian Cohen is kind of like, oh, he will will it to you. How much you've heard me say that about Musk, right? Where Elon Musk can will. Oh yeah, did everything take a hit today? I saw some stuff getting whacked today, but you can just will it to. Like, on the contrary, it's because despite the short-term problems, despite those short-term ephemeral problems, the stock's still out there. That's what I mean. It's like, and now there's the opportunity for, okay, these things get settled down a bit, kind of level it out, come up with the strategy, and then start executing. It's like, oh, that just sucks. That just sucks for folks on the opposite side. And so I think, yeah, I don't know. I think many of us had the same take on that, right? When you saw that. That's the thing. You see CNBC, you see Barron's. These are prominent. I mean, are they still? They were prominent. They were prominent media, and everyone still reads and watches that stuff. Of course. I don't have figures. I just kind of assume a lot of people dialing into that, and then I think, all right, people watching this stuff, and I think it's the wrong take. It's the wrong take, or it's incomplete. It's sometimes just incomplete. I'm not saying although there were like 2 to 3 inaccuracies in there. Where I'm like, how did this get published? Because like with it's one thing for some of the lower echelon media firms out there to publish that, but Barron's, I'm like, they're like the inaccuracy stuff. I'm like, well, this isn't even right. How did this get published? I don't know. Maybe I'm biased. We'll see. Well, I don't know. Okay. Oh man, we're still cranking. Okay. I don't want to be afraid to be shorting it. LDJ, cheers, LDJ. Welcome. I agree. You could only short, right? If you're an individual investor, because again, institutional type stuff, I don't know. They probably know shit I don't understand. This isn't a recommendation. Well, this isn't educational stuff, right? If you're an individual investor and you're shorting this, you better be hedged up the wazoo. It's the only way you could do it. You better be proper hedged. It's just so risky. It's so risky the other side. So I agree with you, LDJ.
This is important too, but so let me read the Michael Wendy. It's already hit that pre-split. Oh, okay. Plunge protection team. Yeah. I think this is why, again, no stock has been coming down, right? Because they were propping it up by all the endless freaking money, just, streaming down, with Elon and all that stuff, now trying to expose all that. We find out a lot of commercial stuff too. A commercial building that was just entered the contract with the U.S. government, and the building was empty. So what do you think was going to prop up? Of course, I think private equity had a hand in that, because most Blackstone, right, the one that owns the commercial building the most, I'm sure some of that go into propping up their assets to try to save face, right? Because they were betting on the other side. Of course, I'm just speculating. I have no idea. I have no proof that Blackstone directly short Gamestop or anything. But the point is that those type of events will cause them to have to sell their most illiquid asset, which is the commercial building, and that's why you see that banks go under, and then taxpayer has to bail them out because that's the contagion, right? And again, taxpayers has been bailing out these people who are risking a whole bunch of other people's money, and that's the problem that we have in in our political. There's no one who have the political will to change anything. And with Trump, though, it's seemingly he's doing something different, but I feel like it's still the same old business as usual type thing. But that's not to say that GME is not going to go up. It's just that, somebody's going to have to pay for it. And usually it's not the very people that should be paying for it. So my fear is that it's going to be regular people like pension fund and all that stuff. So, but again, that's not our problem, right? I hope that people are waking up to it and at least understand that point of view too. But I don't think they're gonna let it go that far. So perhaps they're gonna try to do their best to hide that, right? And so I'm sure the government is implicit to it, at some point or another. And that's why those team was assembled, right? But I think that was assembled before that, before GME problem. It's just that they've been using a lot. Excuse me, I don't know what's happening to my voice. It's just that they've been using a lot of that tactic, more so when GME happened, right? Back then it was just like, a couple billion here and there just to, get them away from certain situation. But this one is a lot bigger than anyone could imagine. So let's see, why did I stop? I feel like I had one more point to say. Yeah, it'll come back to me.
There's many reasons to be nervous.
Individual shareholder, individual, traders or whatever. As he warned it in that clip there, that if you are individually who trying to short this thing, which again, those people exist too. Retail who thinks that they could know best and all that stuff. They think that they could short this thing and get $1 billion out of the short position will be mistaken. And those type of people are going to be the fuel to send the price higher, because eventually they're going to get scared out of their position. And so they have to buy it back at a higher price. And those things are coming. I'm telling you, every single market participant is going to come back to this stock eventually. When they see green, when they see 20% up in a day, the momentum chaser, the volatility chaser is going to come back. And then that's going to be the problem, right? For people who's been shorting, including the individual investor who thinks, a retail investor who thinks that they could short this, and get out of it a billionaire from it. But again, you've seen it in the taunting of live streams everywhere that are much bigger than me, that talks about GameStop. I'm sure Marantz, right? I'm sure you have a lot of trolls out there. It's like, ha ha ha. How is your stock price now and all that stuff. But those tauntings were coming back. And I'm telling you, the volume when it comes, it's poor. So just be ready for that. Of course, again, the volume has been dried for so long. And so perhaps they're waiting for something, preparing for something. Yesterday? Was it yesterday? No, 2 days ago. The DTCC posted a letter about market disruption or whatever. So they're preparing. So you better prepare for yourself too.
I don't know. You have to think it's maybe skepticism surrounding Ryan Cohen. Maybe they think no matter how terrific Ryan Cohen is, and this is a thing in the market, no matter how terrific a CEO is or a chairman is or whatever, no matter how good they are, if it's a sinking ship, it doesn't matter. It doesn't matter how good the captain is if the ship is sinking, and I think that's the thesis, right? But on the contrary, you see some firms that can reinvent themselves, not even reinvent themselves, that are just dominant e-commerce players. But GameStop in particular, with their position in in the thriving gaming industry, a lot of opportunity. That's why that Patrick O'Shaughnessy had a couple of good tweets kind of laying out why GameStop is still in business these days, kind of just a couple of attributes as to what they bring and other retailers don't. But there's a place for a retailer like that. That's why it was so important that this isn't just some horse and buggy industry, right?
That's actually another good point too that was brought up last night. I had a long discussion. That, I brought up how Ryan Cohen was, a central thesis of this bet, quote unquote. That, when you have this type of leadership, you don't want to ignore this type of leadership. And then the other counterpoint is that, it doesn't really matter how good the company is if it's sinking, right? This person brought in the CEO of Intel. Apparently, before he became a CEO of Intel, he was a CEO of some other company, VMware or whatever, that was bought out by Broadcom or whatever. VMware bought Broadcom, but they keep the name Broadcom. So before he left, I guess he was the CEO of that particular of VMware, and it was like the best performing company ever, successful, right? And so when he go back to Intel, something happens in Intel, right? The company itself was, I don't know when he took the position and how well the company was positioned to grow at that time. So again, the example was that, look at where Intel is right now. So it doesn't matter how good the leadership is. If the ship's going to sink, it's going to sink either way. Now, with that though, I feel like GME is in a different position. It's not on its way. It's not sinking. It's not sinking. That's the whole point. People think that it's sinking, but it's not. How is it how do people think that? Well, because of media, right? But if you look at the balance sheet, you wouldn't think that it's sinking, right? Why? Well, because it's not burning cash, right? Like there's no way that a company who doesn't burn cash go bankrupt. You could say that it won't grow. Okay, I'm willing to say that, but even that statement is wrong too. Because guess what? They have cash. That cash generate interest. And then, okay, what else? It's like, well, it's just an interest payment. It's only 4% a year. It's like, only 4% a year? Do you know anything else that's returned much more than 4% a year? Risk-free? Okay, let me wait for it, right? Of course, Bitcoin is one, right? That's what people are touting. But Bitcoin is volatile. Okay, but, I hope they buy Bitcoin. Don't get me wrong, because, I love crypto, as you know. But again, so those things are two different, company at different stage of the company here. So Intel, perhaps when that CEO came in as a good leader already with another company, with his reputation and all that stuff, he can't turn the ship around because the ship is already on its way to, sink. Have some holes in it already, and that hole cannot be patched. Namely, like burning cash and and all that stuff. So while GME is a newly built, ship that perhaps it used to be a wreck before, but we were rebuilding it, and we're about to set it to sell right now because there's no leak. Okay, to make that analogy, brand new, everything. Okay, because we're able to fix the leak already. And now we're ready to sell to the sea, and hopefully have a lot of people onboarding, just to test out the, a newly built yacht, complete with solar panel too. Okay, so don't get it twisted that it's a sinking ship. Okay, I hope you understand my analogy there.
Matt. Matt, welcome. Cheers, Matt Astronaut. All right. Cheers, cheers, cheers. Happy New Year, Matt. Happy New Year. Great to see you back. Great to see you back, Matt. Say new 52-week high by weekend. Oh, okay. Matt's saying 52-week high by week's end. Oh, I'll take that shit. I'll take that. Oh, Justin. I didn't see. No, was there a Forbes article after hours? Justin, was it any good? I missed that. I had to go pick up tendies. Customer announced at ICR, which of course didn't happen. Oh, let's see the strategy that Ryan Cohen's put together. That's understandable. But it's like this type of stuff that not enough people are talking about. Like and this contributes to the bearishness. It contributes to it because that lack of a plan. And this was part of what Cohen was talking about in this letter. It's like no one knows what you're doing. How can you get people excited about something if they don't even know what the something is, right? That's fair. It's a fair, and but this is the thing: the absence of a story or the absence of perceived value doesn't mean there isn't any. That's where the market messed up. Is the market was like, I haven't seen shit that's super exciting, super sexy. That doesn't mean there's anything there. It just means maybe management's not that good of a job of telegraphing that message to investors.
That's important, right? Because again, absence of evidence is not evidence of absent. You have to dig. If you love this company, if you have it as your investment thesis for the long haul, whatever, then dig. Then be a cultish. This is a cult for sure, okay? Of course, clip it, right? People are going to be like clipping this in one of those documentary about how GME investor are in the cult. But it's just ridiculous at this point, right? And it's so obvious on why they do the things that they do. But again, the cloud that GME has been under, it's such a risk to reward thesis in and of itself because it's just so egregiously stupid, right? That no matter what this company is able to do, it's just so malastically, moving through all the negativity bullshit that people are just throwing at it, right? But again, what doesn't kill you make you stronger. So this company has been strong for a long time because, the shareholder basis is so convicted in this company that you can't shake them out, right? I mean, me included. I'm just going to speak for myself here. I don't know how many people are still holding, right? So I only have my own vantage point to speak of. So, and so, those negativity we're still working through it right now, as we speak. So, and again, that's why they keep doing the same thing, right? Because they know it's effective. They know that, no matter what, we're going to be, there's a lot of people who are going to be convinced that it's not something, right? Because they don't hear about it from the mouth of Ryan Cohen, right? Because unless you say something, then, we're not going to move. Okay, then don't move. Sit on your ASS there, right there. Boom. Don't move until you see the result, then move. Okay, then by that time, it's too late for you. I'm telling you, I make the analogy of 2 + 2, right? If you see 2 + 2, and if you know how to do math, you know what comes next. You don't need somebody to put 4, wrote 4 in front of you to know that it's 4. And so for the people who already know the math, they know the answer already. They know the result already. Even though some people might try to put 5, they'd be like, nope, that's not real. Even though, the news is trying to get you to think, oh, maybe it's 6. Maybe it's 8. Nah, we know it's 4. So cut that crap, right? And so, and that's the analogy is like the price coming down, right? Even after earnings. So don't underestimate your enemy when it comes to like the short position. How stupid people could be, dumb stormtrooper effect type thing. So or they just have more money to play around with the market. And so the infinite money glitch happens the other way too, when you have money printing on the other side, which is the Federal Reserve, right? They could just a phone call away from plunge protection team or whatever, right? So understand that, understand your opponents, and eventually something's gonna give. So again, I'm so chill in this that I'm right about this thesis, and of course I'm not going to move until that my thesis is playing out.
Ryan Cohen type would probably be top notch at it. So anyway, that's part of the story I feel like hasn't really been talked about all that much, and you can understand why. And then you see articles like this one kind of laying out how GameStop could potentially reinvent itself in different potential high margin revenue streams down the line, just different paths that they could take. This is optionality that you see. And this is what I suspect will be talked about. In addition to, jumping all over the place. But in addition to, this is the thing. I had said how there's the legacy business of GameStop, right? But even if you take the legacy business and just revamp the e-commerce nature of it, that increases the value of that legacy business, I thought. You know what I mean?
That's what we've done already. Okay? We revamped it, and we have a added revenue stream on PSA. Right? Now we have a service base, right? Anyone who wants to grade the card, you could do that. A returning customer, fan base, right? Niche. People can't get enough of the Pokemon cards and all that stuff. And you create that value on the legacy side of the business, right? Now, the reinvention and all that stuff, we don't need to reinvent ourselves. No, we just have to be better business operator. I mean, what's wrong with that, right? Now, on top of that, yes, we will be able to reinvent ourselves in the technology base of it, but we want to also be good at what we did, the legacy business, which is e-commerce, okay, which is retail based, which is selling things to people, just like what Amazon was saying. Amazon used to be just books only, but then they realized, we could sell anything, right? And I think, again, with Ryan Cohen, the speed in which he was adopting PSA, as Nat Turner was boasting about it in one of the interview, we could really revamp, any type of retail business here, right? But of course, like high profit margin items, right? That's what Ryan Cohen was speaking of back in the shareholder meeting a couple moons ago, okay? And he told you what the plan was back then, but people just so impatient, right? And they didn't listen. They don't, read between the line what he's trying to do. There's nothing to read between the line here, okay? The goal is to be profitable, okay? The goal is to be small enough so that, and the downturn, which he predicted, that's going to happen, because with the money printing like crazy, it's uncertain for the future of e-commerce, of business, business as usual. You no longer could borrow money cheaply from anyone. And so we have to prepare. We've been preparing, and we are succeeding right now, while people are just falling like flies. Okay? Lots of layoffs. Okay? UPS just lay off a whole bunch of people. Use UPS or some post office. I think it's post office. A couple of days ago, if you search it, you find it. Layoffs in 2025. So it was 10,000 position was laid off. And so again, these these are going to also translate to a negative downturn too for the next few weeks. And then on top of that, remember tariffs is going to be implemented April 2nd. Okay. So be prepared for that as well. That perhaps is going to be the excuse for them to smack the price down, no matter how high the price is going to be after earnings. Be prepared for that. So again, prepare for the worst, hope for the best type thing. Yeah.
Like I didn't fully appreciate as the months passed. I'm like, oh shit, you know what? Even this legacy business, they can just do a better job of selling some of this shit online and delighting customers, if you will, to use Ryan Cohen's language. It's probably worth more. They just hadn't really been executing on this stuff over the past couple of years, the prior management teams, right? So I'm like, oh, it's going to be worth even more, the legacy business. And the whole time, I'm like, all right, so it's worth a little bit more than I was expecting, perhaps, according to my mental models. But then I'm like, shit. Then there's still an opportunity. Then there's even more. There's even more potential free cash flows that could be generated to subsidize some transform business model, even though I didn't know what it looked like. And it's that transform business model kind of specifically that I'm talking about. But even to focus first maybe on this e-commerce stuff and kind of just rounding this out, delighting customers, getting people excited. People want to shop there. They're excited about that. And then if there are other potential revenue streams down the line, digital revenue type streams, ways that GameStop can participate in this new ecosystem, that folks are right to say GameStop isn't adequately participating right now. That's fair. It's true. But that doesn't mean that they won't be able to down the line. That's kind of...
See, I hold that thought as well. Now, the discussion also kind of take this point. That's why I saw this video. It's like, oh, wow. Kind of hit all the points here. So, the opposition, the point was that, well, e-commerce is really, nothing new here. They're not reinventing themselves, because if you're just selling stuff to people, Amazon could sell it. My counterpoint to that is that, well, if you could sell more product than Amazon, then you win, right? The competition is there. What makes you think that, Ryan Cohen couldn't sell more computer components or collectible or whatever more than Amazon? Of course, that's a steep, dream-like, unimaginable number. But eventually it's not going to be unimaginable anymore, Again, if you have a type of leadership who's trying to beat a certain parameter and aim to do something better than what you've gotten before in the market, of course it's going to succeed. He's going to be successful. But even if he could aim half, aim high and then hit half, you still, more value than it is today. Still, right? Let's say the aim is to have $1 billion of net income. If we could hit half of that, which is $500 million a year net income, then yes, we're already successful than we are today. But at least we're aiming to do something better, right? To provide that value to the market that Amazon may or may not be able to fulfill, right? Because they're too big. They're just heavy right now. And so unless when they're selling something, unless the profit margin is higher for Amazon, but even the profit margin that is high, they're unable to sell it too. Because again, how many people are excited about Amazon, right? So eventually people are just going to grow tired of Amazon altogether. Now, because this is a niche customer base, right? You really could hone on delighting them in that sense. Now, I have one video here. Let me kind of take our cult leader out first, just to take a break from that a little bit. I know I could listen to him all day, but let me try to find what I saw related to Chewy. real quick because I think it's worth showing here. Give me 1 second. I think it's this one right here.
Chewy, the pet food
Okay.
company. I'm sure some of you already know what I'm about.
So, let me come back here. So this video here really, it's just short. It's less than 1 minute, but it really gives you an idea of how, a sticky customer is really important for a company. Longevity of, customer keep coming back. And the demonstration of that is, of course, Chewy, right? Chewy is Ryan Cohen company before. And let's see how this was implemented.
Chewy, the pet food company. I'm sure some of you already know what I'm about to tell you, but if you have a dog, go into Chewy, sign up. The beginning of every month, dog food arrives like clockwork at your house. You never have to think about it again. Thing with dogs, they die, right? And they're a big, big part of your life, and it's devastating when you lose them. And the first thing you think to do is not to go cancel your automatic dog food delivery. So a couple weeks later, dog food comes after you just lost your dog. It's devastating. You call them, you go to cancel it. This is what they do every single time because they've identified that as a recurring moment. They credit back the last bag of food. They can't take it back for health code issues, so they say give it away to anyone that needs it. And then 2 days later, you get flowers from Chewy saying sorry for your loss. That maybe costs them $25. When you have a dog, you're very likely going to get another dog. You're never going to buy dog food from anyone else ever again.
So that's important, right? Again, to creating that that customer base that will keep coming back to you over and over again. Now, of course, the counterpoint to that when people when I bring that up is that, well, people are crazy about their pet, but they're not crazy about their video game. Kind of disagree. Again, there might be more population that are crazy about pets than video games, but there are gamers who are very serious about their video games. So, and if you could create some sort of, a way for them to come back, which I feel like, the reward program, the pro membership is one where, you generate a lot of value for your customer in that sense, right? And customer care, I'm sure, we're being built on that, building up on that to see, with the PSA grading, to be able to track your order here and there. And of course, yes, with business, you can't please everyone. So you see a lot of angry video for some reason, and you have to be taking those video with a grain of salt. I don't want to be biased in the sense that all of those are bought and paid for, because that happens too, where people are just paid to make negative video about GameStop, right? No matter what they do. And so you would see a sprinkle of video here and there, and seemingly a lot of large, like 100,000 plus subscriber channel that would just out of nowhere, it's like, oh, I ordered this from GameStop, and then something happened to my order and all that stuff, right? And then they feel the need to post it on social media to try to derail the reputation of the company. But oftentimes, you would see Ryan Cohen comment straight on that post and say, oh, just DM me directly. Let me look into it myself, right? That does two things, right? Whether he is serious about his business, being, delighting customer, or he just want to know whether these people are legit or not, right? So that's also is happening too. Don't take my word for it. If you follow Ryan Cohen page, you probably see those posts already. So, and people might be like, "What? Why are these people? Are they CEO? managing his company on X or whatever. That's unprofessional, right? Again, nothing that this man is doing for is is a good thing. There's you cannot please everyone, but eventually, if you take care of the majority of your customer, they will keep coming back. Now, the sales number is going to show people for sure. This particular quarter earnings report. What I'm curious to see is the PSA, like the amount of collectibles that we are able to sell. And the business model is working, and well, okay, let me see. I mean, okay, the business model works for sure. E-commerce been around for a long time, so it's not broken. Okay, what's broken before was that we weren't profitable because of bad management. Okay, and so this would be the demonstration whether Ryan Cohen is able to turn this around or not. For those people who are naysayers, right? For sure, they're not going to understand it. But even when we're posting a good earnings, I'm sure they're going to try to find something negative about it. So just be aware of that too. Hey, because I can. What's up? That's not how you say GME. Oh. AMA. What? I don't know what that is. All right.
Kind of what that seems to me what the market may have been missing.
Sorry, you guys. I have a lot of time to burn today, so you might be stuck with me for quite a bit. I just want to make sure I hit every point, right? And I'm pretty sure I'm kind of touch on a lot today. Most of it just repetitive stuff, but I think it's worth repeating because people still don't register with them. Whether you're new to this or not, I'm sure most of my audience are already well deep into, being a cult already. So I'm preaching to the choir at the moment, but just offhand, somebody who just, want to at least look into what is GME, why people are buying into this shitty company. Let me look into it. But yeah, so that's the challenge, right? How many of us are actually holding on to this company and actually believe in the future of the company versus the other population? Now, if it's 2080, right, we're still early, because if the rest of the population is still not agreeing with you, that's the opportunity, right? But the opportunity of early investor is a lot of pain too, right? Because then, you have to wait a little bit longer. But I'm telling you, by the time the 80% agree with you, that's when you have that millionaire status, right? For whatever shares you bought. Okay. Hopefully by then you have a lot of shares already that the price action is not going to give you a heart attack, okay? And that, you're able to, your investment would be able to appreciate to the point where you have a lot, of cash if you choose to X out of the position back then at that price, okay? So again, from this standpoint of that, the growing pain for early investor is how long will the rest of the world agree with you, right? I mean, think about Bitcoin, right? It's been around for how long? Versus Amazon. It's been around for how long before, it becomes what it is today? Tesla, it's been around for how long before it's become how it is today? So that's the growing pain for sure. But again, more pain, more reward later, right? High risk, high rewards. So Roy and Kitty took a risk when it was $1 or so, right? After the split. And then he got rewarded. because the risk was a lot higher back then than it is today. Now, today risk is not as high as before, but it's still a risk because of other people not agreeing with you that the company is doing well. Okay. So just wait. I mean, one day at a time, right? One person at a time. They're gonna slowly agreeing with you because, again, at some point it's gonna be inevitable because the balance sheet's gonna tell them that, and then the institutional investor is gonna tell them that. I can't stress this enough, you guys, because again, the institutional investor is the one that moves the market, and then after that, you're gonna get speculator. Okay, that's why I said, like, unless the institution accumulates 60% of GameStop from now, because right now they're slowly, if you look at the Intel just recently, I'm sure you've seen this. Let's see, ownership, institutional ownership. Okay, hold on, you guys. Give me 1 second here. Now, this one right here, of course, it's showing us that there's even more, a little bit more of institutional investor kind of slowly adding, right? And again, nobody's telling you this, right? So unless you keep track of it, the conventional wisdom is that institution is not interested in this at all. Nobody's buying, right? Nobody's holding. Nobody really pay attention to this company. But again, dark pool. This is why you don't see the price action yet. The price is coming. The action is coming. It's just that they're allowing these people to get in first before they send it higher. Because remember, when the institution are interested in buying hundreds of millions of dollars, typically they make the price come down because then it's low enough for them to accumulate at a lower price. It's unfair for sure because retail investors don't get to participate in that. Again, traders, right? But if you are an investor, you have more time horizon to wait for those type of spikes coming. Okay, time horizon is also very important too. But yeah, I'm telling you, until, see right here, it's inching, right? It used to be 12%, 15%, and then 21%, and then now it's closer to 40%. When it hit 60, oh, like then we'll win already. But again, there are people who will not touch anything unless the institution touch it. That there are a retail investor who are like that. And so that's when, you see the Palantir type of move, because after the institution gets in, everybody got excited, right? And that's another cascaded events too that may happen at some point. So let's see. Let's check the short interest real quick here. Yeah, so it's still at 7%, close to 7%, not much there. But again, this is self-reported, you guys, so take that with a grain of salt. KCR, hey. I'm holding on to my share, and I think we are still early. Of course. Yeah, we're way too early, and I'm sure, again, not everyone think that though, right? And again, that's the opportunity of a lifetime. When the least amount of people agree with you and you know what you hold, you know that this is special. Okay, you want to buy when it's like boring. You want to buy when it's down. You want to buy when nobody wants it. Okay, when everybody look into, oh look, had I got into Palantir? I'm telling you, like retail investor has been just scattered everywhere, and of course, there's always a fool to, get you to buy into something that is high price. And then they think that they own the best thing ever when it's overinflated. I'm telling you, like, look at Nvidia. I mean, it's down $1 trillion. Nobody talked about it. It's like no one crying in the TV, just like Moran was saying, no one cry. No billionaire just, come out here and just cry on TV. No. But, if GME goes up $1 billion, that's a problem. It's like, And again, that's the whole point that I'm trying to at least stress. Can't stress that enough, because not many people understand the manipulation on the other end too. They could manipulate you to buy into something that is high price, overpaying for things. It's like, well, these are the best company ever. Okay, is it? I mean, did you look at the balance sheet? Did you look at the PE ratio? Like the people who worry about the PE ratio of GME, right? It's like, oh, look, it's 100, whatever, right? And then at the same breath, oh, look at the Palantir, 400, really? It's like, oh, it's moving. I'm like, okay, you could buy it. I'll stay here. Don't worry about it. I'm telling you, we had a long discussion on that. But every point that was brought up, of course, again, the pain is that, people who've been holding, hold on, you guys. Let's see. Let me go back to our cult leader over here. When you've been holding for a long time and then it, goes up in the green, didn't sell, and then coming back down, now it's in the red. Yes, I understand the missed opportunity, quote unquote. How do you know it's going to come back down, right? And so, again, the psychological turmoil is that, I should have sold at 34 or whatever. It's like, well, then you could have. Right? Why wait? Well, because they thought it's going to come even higher, right? And people don't have the strategy to go in and out because they're afraid when it goes up in value, they're afraid that they're missing the spike, right? And so therefore they don't sell it until, it hit. But then when it come crashing down, people are like, well, I wish I had sold. Right? And then they depress themselves because of that action alone. So rather than flip it, it's like, okay, when it's going higher, I should start to trim off, right? If that's what they do, I mean, that's how they feel. But again, the actuality of it, the actual emotion that you feel is, I'm sure it's illicit, by those price action, because they want you to sell at a lower price, right? And then when they bring it down to 23, they want you to feel that pain when they spike it up again. It's like, okay, now it's back at 34, so you better sell now. It's gonna, coming down. And then when you sell, that's when it goes, when it, rip the other way. So they got it down to a science, you guys. So you have to train yourself to think the other way, for sure. And if you've been here long enough, you would understand that psychological warfare that you have to go through because of the price action. Unless you don't care about the price action, you just buy whenever you feel like it's undervalued, and then just wait. When you feel it's overvalued, then sell then, right? And that way you're not stressed out. You're not. because that's why DCAing is so important. And people just steering you away from that. Well, had you waited, it's like, okay, had you wait for what? Did you know the price was going to come down to this level? If you do, why didn't you sell? See what I mean? And then come back down at a lower price. The problem is you didn't have the benefit of a hindsight today to know what would have happened, had I sold or whatever. And so that's why have a plan, have a strategy, and then just stick with it. And then you'll be like less stressful on that. Yeah. So yeah, I hope I drive that point home.
Okay. I need some water. What time is it? Oh, 8:20. Okay. Oh, I still had some left. Oh, shit. Okay. Hey, cheers, Harad. Hey, cheers. The legend. And I'm as invested, not so much, financially perhaps, but even professionally. Like this is his next big thing. He may even be chairman in a couple of months, right? If I'm that, I want as much of it as I can have. And that I was thinking, all right, he's probably going to up his stake. I mean, I've long felt, and was it on my Twitter? I long felt he was going to up his stake, right? Many of us thought that. That's not a hot take or anything like that. But I continue to think that. Because he's betting on himself. If we have confidence in him, right? Surely he has confidence in himself, and he thinks that the valuation is ridiculous. You have to think, if you're him, that you think that. He's like, what the hell is this, right? And so if that's the case, buy more of the shares. And it could be that this is an attractive price right now, right? Again, we were at 19 a couple months ago. We'll have to see, 1.4 billion. It doesn't seem that high compared to what it could be if they take it to the next level. You know what I mean? Right? And I think that he sees that too. But then the question is, this is the thing. People have been talking about a dip and stuff, right? What's going to cause the dip too? Now, a market sell-off can always cause any dip. I don't care the company, I don't care if it's GameStop, whatever. If the whole market tanks, not that Ryan Coe would necessarily have a strong forecast of something like that, right? That's tough. Not just Ryan, anyone who's going to have a strong opinion that the market's going to tank in the next couple of months. And usually with strategists like this, they just get involved and they're like, well, market price action can do whatever it wants. But to bet on a decline so that you can opportunistically add seems, they don't usually do that. Instead, they just do, all right, let's just build a stake. But now it's beyond just a position, right? Now he's in there. So I was thinking like, yeah, maybe he'll add sooner rather than later, especially if there's risks to the upside, right? What are the downside risks? The last one that people were talking about were holiday results, which are out. They're out. Now, you could say that maybe Q4 isn't going to be as dominant as you thought it was going to be before, but didn't they forecast profitability in the press release? Like, just to turn a profit after all these years of losses. And I know it's the big Q4 and stuff, and maybe it could be underwhelming, perhaps, but I'm like, oh boy, maybe he's like, now is the time I need to add, right? So I was thinking about that, Uber. I don't know. Hey, Shane Decker. Welcome, Shane. Happy New Year's. Yeah, over 400, huh? Cheers. Cheers. All right. Shane was here before, too. We didn't have this many. This is sick. But now we have... So a good thing about having... And look at all the... I mean, I haven't read all the comments, right? But you can see there are some knowledgeable, reasonable people out there who have good thoughts about what's unfolding here, right? And of course, there's financial analysis that gets done too. But here, there's like some strategy being done, and a lot of people have a lot of good thoughts. With this many people, more ideas being bounced off of each other, and pursuit of truth, right? Pursuit of truth, sick. Wait, what were you just saying that you like though?
I can't stress this enough too, because like it's still relevant. Everything that he's talking about GameStop then was still relevant until this day. If the markets tank, GME is going to come down with it too, because again, it's being thought as a risk asset, and they take advantage of that. Who's they? Market maker. Okay, people who have the order flow, people who have the ability to scare people because of the price action, right? They know that is a sore, okay, on the wounds of the people who just, again, that those are the day traders, right? Those are the leverage traders, people who borrow money to buy into whatever. And then worse, borrow money to buy into call option, right? And they know that those type of people are more likely to tap out than investor, right? And because they know, perhaps, again, I'm just speculating, that the ratio of investor versus day traders are skewed. So there are perhaps less investor in this company than actual day traders themselves, because they see the data, you know. But if you like it or not, you know, when you place an order, they know it. They know what price are you going to buy at, what price you're willing to sell. They know all that. So therefore, they're going to try to scare as many people out as possible. Now, as an investor, that's your opportunity, right? Your opportunity is that no matter what the price action fluctuation, you know, it depends on how many people bet it up and down. The leftovers is the people, you know, you are the one that, you know, get to benefit the differences between the buying and selling, okay, over time, because, you know, those people are going to bring more popularity into your stock as an investor, right? That's a good thing, because now, you know, market maker, because there's a lot of volume being traded, they're more likely to, I guess, incentivized, okay, for people to keep coming back to trade the stock, right? So, I mean, that could be good and bad too, because, you know, if the negativity is based on the price coming down. But my point is that, you know, no matter what, GME, GameStop is going to be talked about on the media for a long time, until the end of humanity, right? So that's good for the brand, right? That people will remember what GME is. And then they're like, oh yeah, I remember that company. So that's immensely, you know, valuable for investor out there. But yeah, that's just intangible value that you know, people didn't even think about. Because again, they only see the numbers, right? I mean, this company is more than the number that you see on the sheets. Yes, number is important, but you know, as an investor, you have to think about the long-term growth of the company, right? And because Ryan Cohen doesn't telegraphs on the sheet of paper or through the word of mouth, people just so misunderstood. I mean, just didn't understand where the company's going to go, because again, Wall Street just so used to, you know, CEO catering to their needs at all time, that when Brian Cohen said, no, I don't care, just like what Jeff Bezos was saying. It's like he doesn't care about what you think, you know, what Wall Street think. The metric is going up. That should be a reason for anyone to get into any company, right? They want the metric go up and 5 years plan. It's like, really? 5-year plan? 5-year guidance? For what? I mean, how can you predict the future of anything? And so, you know, every CEOs who are catering to that type of demand, of course, get promoted. But typically when they get promoted, it's just overinflated in value anyway. So retail don't get to participate in that at all, right? Because by the time you hear it and in the news, it's too late for you already. Sorry, you know? And so if you're the type of people who are waiting until the institution getting in before you get in, you are buying it from them at a higher price. Okay? So, telling you, you're early. Be happy about it. Very lucky in that sense, but they don't even know their luck, right? Because they keep complaining about the price action.
Oh, Jeff says, I can't believe he pulled an over 9,000 meme. This was, I mean, that's hilarious, right, Jeff? Jeff Amazon saying, Wait, I got the 13D up, right? Look at this. Now I feel confident this was on purpose. I mean, I'm not 100% sure, right? But I think he did.
So this is the one that he has as a 9 million shares. So hopefully he still have the 9 million shares. If we know anything about Rowan Kitty, he's always double down on his position. So hopefully he's gonna double that, right? The next the next YOLO update in this run, that would be massive, right? Of course, I don't invest based on Rowan Kitty, although it's fun to look, to participate in that. But, people are anticipating that he might be posting later on, right? Or in this nearest future, right? I'm sure he's watching this right now, lurking about. Who knows?
He did it over 9,000, right, Jeff? It seems odd to go to 9,001, excuse me. 9,001,000, come on. Oh, okay. So Justin's saying how Ryan Cohen, his new directors, and Hestia can get over 50%. Yeah, that latest that 13D was saying only the reporting persons could only get up to 1999. But Justin's saying how, hey, you group all these together, they can eat up a good chunk, right? And I mean, that's not to say that they're gonna, right? Justin's not saying that. No one's saying it's definitely gonna happen. But isn't this a risk? I was talking about how many different types of holders there are out there, but I'm like, jeez. What if you got a group? What if you got a group of guys? I mean, a group of what should we call them? Because they're not all in the same fund, or they're not. First of all, the new board directors aren't even part of RC Ventures. But if you got a group of just folks, a group of investors who are all on the same page and they have the same level of conviction about what the upside is, and they're like, you know what, we're gonna do this. I don't know if Hestia and Permit do. I don't know. But if they do, and they're like, yeah, we're doing this. We're taking this to the next level, and then they just start. But they want to own like Cohen. Maybe they want to own as much as they could.
This is important too because, if you look at the recent posts. Okay, there's a lot of billionaires, Michael Saylor, that guy from Dubai, Sullivan or whatever. Sorry, I might butcher his name. And recently the Spotify, right? A group of people that are, being, he's in the circle of are typically millionaire groups of people who are probably, again, are buying into this company that you don't see on those the 13F or whatever, 13D, sorry. Those institutions that are again, personally billionaire themselves, that I'm sure they probably put a couple of millions of dollars into GameStop right now. And they are investing it because of Ryan Cohen, right? They know him personally. They understand what he's trying to do with this company. And those shares going to be out forever. I mean, meaning off limits forever. And I wonder how many of those people in his circle, have that, right? And so that's a hidden amount of shares that we don't know that will be locked forever, right? Until, the thesis plays out. And so that's why it's so scarce, Every time the trading volume, there's nobody selling. And so these market maker, they're just selling it to us, hoping that somebody will buy it later. Or hoping that later on we're going to sell it to them at a lower price. Because, if they're buying in the lit market, it's going to be catastrophic for them. Okay. I mean, famously, there's a clip of Ken Griffin saying how, the role of the market maker is to find buyer at a later time, which is bullcrap. That's not the role of the market maker. So be more like be more. Oh, okay. Thank you. But anyway, so the role of the market maker is to facilitate the trade, matching the buyer and the seller. You don't front the capital, hoping that somebody else will front the capital later in a later date. No. The role of the market maker is to match up seller and buyer. If there's no seller, then the buyer has to increase the price. right? To meet the seller demand. And if you don't, yes, okay, you could have a standstill, but eventually people are going to be like, hey, I want to buy at that price, right? And so that price should be going up in value because that's the only way that anyone would sell, right? So that's a free market. But right now, you don't have a free market. You have a group of analysts out there who thinks that they could just fix the price at this price because they think that GME should be at this price. No. That's not a free market. Because if you think that the price should be at this price, then why are you selling it to me at a higher price? If you think that GME is only worth $10, when I hit buy in that lit market, it should feel at $10. Why does it feel at $23? Right? So that's the bull crap, thing that they're doing to the market, because they think, GME is only worth this much, should only worth this much, despite all of the demand that is happening in the 3 years time period. So again, that's another layer, right? A layer of good things for the company. Good thing, you know why? Because the price is suppressed. The price, no matter what you're buying right now, it's suppressed. That's why, again, later on, these people are going to have to buy it from you at a higher price. And it's mandatory. It's crazy, right? Dumb stormtrooper effect, but people are dumb. But what can I do? Try to be smarter, I'm trying to smarten up myself too. But again, the other opponent would be saying that we are all dumb because, listen, why would you buy into this type of company? Not really. We're just more convicted than you are about the prospect of this business model. I mean, could it just be that simple?
It's like then they can just start eating up some of the float. Not eating up some of the float, but eating up some of the shares, right? And then there's just fewer to go around, right? Those share repurchases. I mean, then they get the shelf too. So I don't know. What else is I doing there? What was right before that? Okay, so Gats was saying, I did this exact text. If I'm Ryan Cohen, what would I do right now regarding my sleep for ICR? And it's just someone, oh, okay, so you were thinking about that, right? Yeah, I was wondering, right? I think many of us were, I thought an amicable resolution was possible, but that it was going to be announced before the ICR, I didn't necessarily think that was likely. I didn't think that was the likely outcome. I wasn't like, oh yeah, they're probably going to announce like what? I thought that might take time, right? Or if they were even going to announce it, I thought, is that something that you'd announce at ICR? But then, then the question of what does he do with his stake and stuff? Yeah, I don't know. I will say, I don't think that price properly reflects what has happened today. But that's not to say what the stock price is going to do tomorrow. It doesn't work like that. But it's Ryan Cohen, but more a cohesive management and board with an opportunity like this is really good. It's really valuable. It's valuable, and that's what I think that it wasn't adequately reflected by today's move. Again, who cares about the one-day move? You've heard me say this, right? Let's see how it ends the week. Let's see what it does the next 2 weeks, right? It's not all about that one-day move, but it's noteworthy, right? You'd be like, that 12% move, all right. If you say so. It's not to say it's going to happen, but here's day 1, 14. Let's see what tomorrow brings. Oh, where'd we end at 8? Oh, we ended at 20. Don't overthink the after-hour stuff, right? Yeah. Okay. Oh, okay. So much better than store. Morgan. type would know if should they tier their different memberships so there could be additional perks for different levels. That could be a path. MSU Jaws, welcome MSU Jaws. That type of analysis, I just don't. And it's just because of I guess my style of investing. I don't know. And but now, Ryan Cohen gonna single-handedly convert me from a value investor to a growth investor. No, but that's the thing, right? The whole delineation between value and growth is kind of silly, right? But for shits and giggles, you gotta have a laugh. You gotta have a laugh with it, right? Is that but that's the thing, and that's why it's good to be. I think it's good to be flexible with some of this stuff, and that you can see value in different areas, whether it's a traditional value stock or a growth stock. But many times they're two sides of the same coin, of course. But as far as that potential upside, saying that. Oh, Zane, I'm like, oh yeah, this is, and I said on the last one, I hadn't felt as vindicated on the last stream. I hadn't felt as vindicated about the thesis as I had after Cohen had added, you know what I mean, the stock price. I'm like, this is good, because it's one thing to talk about the upside optionality, but to kind of see it kind of unfold as you hope it could. But yeah, we'll have to see. It's a different type of a thesis, right? Like the rapid ramp up. That's kind of that's the first part of the thesis, right? Because that's when you see the very quick gain. I talked about this in one of my the first investment style video, right? That's where you get the quick run up, is when people think that a stock is going bankrupt and then it's not. Then the market has screwed up royally, boom, 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 and then it's got to re-rate quickly because they messed up. And then there's the second level of it, which is, I mean, it's still a turnaround. So there's the turnaround aspect of it, right? And then if they can achieve it, like that maturity, what is it? The 4 phases of the business cycle, blah, blah, blah. But if you can achieve that maturity phase, then you can grow over the long term. And even if we don't need to assign a high probability to this right now, but if GameStop did, they had this new business model, they reinvent themselves, blah, 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 whatever it looks like, I don't care. But if they did, and they can grow alongside the gaming industry, this is why I mentioned that in one of those early GameStop videos.
This part is important because, again, we're at that level right now. We're at that point where, yeah, we could grow alongside the gaming industry right now with the money that we have, okay, with the ability in which the balance sheet is going to carry us through that growth in that sector. We can do that, and we have the freedom to do it whenever. And so, it could happen within just a couple of years that we're gonna, take a market share of a whole bunch of sector here. And again, the NFT things is what people don't really understand it quite yet. And I'm so, excited about that. Like even the NFT with the blockchain coming in, they could play a whole bunch of, tokenizing the asset of whatever, the NFT arms of it, just the collectible aspect of it. And again, like you could tokenize meme coins as well, right? If that's what we're, the culture of memes will add a whole bunch of value into this company. Of course, like meme coins is, it's only collectible purposes, but it's already been kind of said by Hester Pierce, right, which is the chairman the commissioner, and SEC commissioner that talked about meme coins as a collectible now. That it's not a security, so that's a floodgate in and of itself already that is about to come. And again, I'm not saying that Jimmy's gonna, do that, but I'm saying that could be another possibility too, right? But currently, I'm just speculating. I'm not even come to fruition yet. But all I know is that we have the NFT marketplace already built. So I don't think we scrap that idea altogether. And it would be crazy that we already have the trademark for it already, spend money to build it already, and because of the regulator uncertainty at that time, we were forced to kind of put a pause on it at the moment. So now that the regulation eased on that front, we could turn that up now. And so yeah, it's remain to be seen. Just be patient. The growth is gonna come. It's just that right now we are in a sticky situation because of the customers. Discretionary spending is very low. Consumer confidence went down because inflation, uncertainty, whatever. But just have to weather the storm yet. Okay. The storm's still here. We can't sell it yet. We can't sail in the sea yet, but we have the ship ready to go. That's the analogy. That's what I feel in terms of the company right now. So, let's see. What else?
I can't remember which one. This is why it's so important, because if it was a dying industry, it's a whole different ballgame. But because the industry is sick, that if they can find a way to capture a percentage of that market, they can grow alongside it. And then it's just it's just worth so much more. It's what it is. That's the opportunity, right? This is kind of the uncertainty around that. Anyway, on that particular part, Zane, I'm as bullish as I've been. That doesn't mean it's going to happen necessarily, right? And it could take time. It will likely take time, but that's how I feel. I don't know. Go Ryan Cohen. But that's the thing, is that even if something's not a multi-bagger, it should be tracked anyway. Number one is because it could eventually become a multi-bagger if it sells off. Let's say the market was selling off. That's the thing. It didn't even sell off that much in March and April. I remember that took me by. But to be honest, I wasn't as dialed in when I looked into it. I wasn't as dialed into it. I'm going to keep scrolling through, but I've looked at this before. I remember thinking, I don't know. It's like, I remember thinking like it was cheap. I'm like, oh, it looks cheap. And it could make sense that maybe I don't know. I got to look back into it. Thanks for the reminder on that, Jupiter, though. Just scroll up, catch a couple. I'm here to learn with you, Eric. I'll tell you that shit. Not even on net. Trim the position on the shorts. The shorts is short. My thesis is.
Sorry, guys, I haven't seen this one in particular, but yeah, you could go and search for this one. It's on his channel. These time frame right here, and it's the one with Ryan Cohen on it. But yeah. I'm getting ready to let you guys go. Appreciate so much you guys coming in and kind of listen to my rant here. But before I let you go though, just to give you a little bit of hope here, right? Hope, as if you need it. If you're in GameStop, you better chill for quite a bit. But this is the M2 money supply. And of course, we've been seeing a lot of like negative news about how the market's gonna come down, right? Sell off, get out, or you're never gonna get your money type of, alarm. Look at the M2 money supply. It perked up again. Okay. So since February, now this have a lagging effect, right? You've seen that the market kind of rolling back. This is where we at right now, somewhere around here. Okay, so if you, I don't know if it will do this. If you kind of put SPY, will that give me that? No. Is there a way for me to bring it down so that we could see it? Try to see if there's it here. Okay, hold on one second. Let me. I don't think I could do that. You just have to remember it. So okay, let me take this out. Let me try to show you what I mean by this. Currently, if you look at the market, right, we should be at an all-time high, close to the all-time high, because this is the money supply that is about to, get into the market again. Okay, because they have to print, keep printing, debasing the dollar, and all that stuff, in order to prop up this economy. Okay, because if there are defaults on the loans, Treasury, it's going to be a calamity of the world, all over the world. Okay, so that perk up is going to come back, but if you remember this one, so when the liquidity comes into the market, what usually happens? The stock market's going to go up, right? That's the hope. Obviously, it's not going to give you the perfect time, but it seems like this is the time in which plunge protection team's going to come in and do its thing again, right? Do its work. Now, again, it doesn't mean that it's always going to have to hit at the right point, but I feel like this is the could be the bottom here. So there might be a little pain coming still, just to fake so many people come in more, right? So about 6%, that's gonna freak people out, and then I'm sure they have to come in before that, right? Short-term pain for long-term gain type thing. So be prepared for that. When is that? So let's just mark it here, right here. That's Friday. Monday, Tuesday is earnings right there. So you have about 10 days for the SPY to do its thing, right? Maybe roll back, up, and then boom, right? Who knows? I'm just like predicting this like crazy. Simple TA, right? Don't make any trade based on this, okay? I wonder if I put the money supply here, will it work? Oh no, it's not gonna work. Whoops. But yeah, so if you put the money supply over here when it rolls down, right? You might see one of these things here, and then by summertime, it's gonna go back up to near all-time high. Now whether that's the last push, right, to at least trap more people in, bull trap or whatever, that could be another reason why it would go up there too. But again, like if you look at the volume, okay, the volume, it's really low. Typically when volume low, nobody is actually buying at this price point right here, right? But if the money printing keep going up, obviously that's gonna create that inequality in the market too. Working class not gonna get much. Doesn't matter if they crash the market, Jimmy would just. But what they like penny on the dollar, okay. Just buy what they like the penny on the dollar. If we go up, okay, collecting win-win. Yeah. Collecting interest. Of course. Now interest is gonna come back down for sure. So that interest is not gonna be $200 million if we're still in treasury bond. So I think it would be the better time to buy into Bitcoin if that's the case. I know not many people like that idea, but Bitcoin has been that hedge because, again, the money printing, right? They have to debase every dollar that we have. So, because in their mind, they don't know how to grow. The government don't know how to grow. Government all around the world, they are doing the same exact thing. So that even push asset price even higher. Gold just hit the all-time high, right? Look at gold, $3,000 per ounce. Crazy, right? So, but somebody did a analysis on Bitcoin too, that typically Bitcoin follow golds. When gold hit high price, Bitcoin's gonna, follows soon after. So there's a lag effect there too. See, if you look at the spike of gold, Bitcoin went down, but then it follows. Spike, went down, follow. Let's see. So right now, what we're seeing, there might be a correlation there. Spike, went down. Maybe it's time to follow gold. Yeah. But again, it's still a volatile asset, obviously, very new, yet nascent asset class, newly minted asset class, which is Bitcoin and crypto in general. Not many people understand it yet. So even if you buy into Bitcoin, obviously you're still early. Again, just my opinion. If you do your own research, you understand it more. So, all right, guys. I think I'm pooped out at this moment. But I truly appreciate all of you coming in, interacting, and I hope you learned something. I know mostly I'm just preaching to the choir here, but yeah, hopefully there's one soul out there who try to learn new things here about this company. Just to be prepared yourself. If you buy into this company, just expect the worst, okay? But hope for the best type thing. But you really need to look into the balance sheet before you invest $1 into this company, because then you would understand it from the fundamental level, and price point is not going to shake you off. Doesn't matter what happened. All right, guys, I will see you when I see you. Thank you.